We were just talking there about tech negativity, and that's part of the driver of the sort of meltdown we've seen through the Asian session. But the job story out the US, also part of that story. The Topics index closing down 6%, the biggest drop since 2016. Give us some of your thoughts on the scale of the selling we've seen through the Asia session.
Yeah, it's pretty momentous. We've seen the Topics index have the biggest two-day fall since the tsunami in 2011. It's the worst day for the banks part of the Topics since October 2008, in the middle of the financial crisis. So it's a really dramatic day in Asia. There are three kind of big elements going on globally here around this stocks meltdown at the moment. I think, for one, there's a real worry around tech. You just had Matt on there talking about this, and there's this idea that maybe the AI bubble is popping, and certainly the price action there is terrible. Now, that can be disconnected from the economic signal out there, because they've been trading in incredible multiples. They've been trading this really euphoric story for quite a while. So we could see that pop without it spread through the economy. But there are two other negatives out there. One is the idea that maybe US really is going into recession. Maybe it's the economy is slowing much quicker than anticipated. I think the concerns around that are overblown, but certainly I understand why they're there, and I am nervous. And we go into non-farm payrolls, which will confirm that either way at the moment. And then the third element of the slowdown, which, going back to Japan, going back to the really intense pain there, is that there's this perception that central banks are making policy mistakes. Maybe the Fed's behind the curve. And what was the BOJ doing, finally hiking rates this week, just as we're kind of going into this rapid growth slowdown and other central banks are cutting rates? And it's that sudden kind of juxtaposition of going in the opposite direction that is really hurting the Japanese stock market really badly.
This is a nervous Mark Cudmore then. Look, you don't think the hard land is coming, but you're nervous, you're anxious about it. So the question as to whether or not the Fed is now behind the curve, and of course we heard from Bill Dudley and Mohamed El-Erian, but essentially making that case, and yet we expect the first cut in September. When it comes to the jobs data then, because that is such a crucial part of it, you heard from Jay Powell, what are you looking for in terms of non-farm payrolls? Wage softness or the overall that's kind of top-line number? How consequential would this data be, Mark?
So I think we've shifted the focus entirely from inflation to the jobs market. That's what this week has been about. And that's what we saw in the ISM yesterday. We had prices paid was high again, but we're not worried about inflation anymore. We're worried about those cracks in the employment market, the labor market. So I think, we're not going to suddenly care about the wages dynamic too much. Sure, as a secondary thing, we might get worried about stagflation if we continue to worry about growth. But it's going to be all around those headline numbers and the unemployment rate. Do we trigger the SAM rule? Do people get excited about that? Now, I personally think that yes, the jobs market's slowing, but from an extremely hot state. This does not look like a recessionary kind of jobs market just yet. Now, obviously, maybe it is going to go over the corner. It rarely looks like a recession just before it arrives. But I do have to say that, to me, the asymmetric risk going into today's jobs data is that we get a slightly strong print, and this panic we've seen this week about a hard landing and the Fed behind the curve will be thrown out the window, because you know what? We have not controlled the inflation genie if the economy is not going into recession.